Hey everybody, it's Pete Carmesino. I'm traveling here at a conference in Vegas, and I'm going to start the video off with an incredible view. I'm going to pull away from the camera so you can see it. It's right behind me. We're at the Wynn Encore uh, property in Las Vegas for a conference, and I got a cool view of the Sphere. Check it out. It's pretty interesting. The Sphere, if you don't know what it is, it's a venue event. Right now, there's a little guy with a smiley face, like an emoji face. So I think it's pretty cool. It's pretty amazing. I think this is probably going to pop up kind of all over the place. I would think and major cities around the world are going to want one of these. It's really amazing. U2's playing there this week. So a lot of activity there, and a lot of folks are super excited about it. But it's pretty interesting. If you follow me on Twitter, you can see some one photo I posted is pretty actually spectacular view in the morning. So okay, so you're here for the halftime show, not my antics here on the Sphere, and we're here to talk about markets. So I welcome you again, Pete Carmesino, again, Chief Market Strategist here at Chaikin Analytics. And look, the markets are selling off. I mean, we're in earnings season. There's no doubt. Obviously, we're down about 200 points on the Dow, about 40 points on the S&P, and about 150 some odd points on the Nasdaq as I record. So look, I mean, we're just talking about the things that continue to creep up, and there is some push and pull in the market, always will be. We've got the GOP House, speaker vote, loses, that was a second loss there. You've got Biden potentially, talking about the geopolitical issues in Israel. We've got the Treasury auctions. We've got 30-year mortgage rates just hitting 8% for the first time since 2000. That's a 23-year high. Okay. So obviously that's going to be bad news for real estate, potentially not only residential, but maybe even commercial. And there's a lot of talks about that. So there's a lot going on in the markets that seem negative, and they are obviously, but the market is incredibly strong here. And it's pretty amazing because it's gone right to a level that I had pointed out several times now for the last several weeks, sitting in this range and that channel that was an upward channel and then went to a gap fill. I'm going to go over that today. We're going to look at the S&P, we're going to look at the NDX, and obviously we're going to look at TLT because it continues to fall. And obviously that's making rates increase. So maybe a little shorter today, and but right to the point, because we got to talk about levels on these indexes and kind of talk about what's happening here. Some things, and I do have a list of names that seem to be breaking down. And one other name I want to go over is Boeing, which I called out on Twitter September 7th about a relative strength change. The stock was around $216 or $214. I can't remember, but I stress, please follow me on Twitter. You'll catch some things like that once in a while, and I'll show you my Twitter handle today on the video. All right, so let's jump into the charts and see what's going on. All right, so here's my Twitter handle at Pete Carmesino. There's a pretty amazing view, I thought, anyway, of the view you just saw, but pretty interesting concept here with the Sphere. It's pretty cool. I think it's going to gain a lot of traction. But back here, I wanted to talk about this tweet that I put out when Boeing has now moved all the way down to the 180s. But in this particular the reason why, right? I mean, the reason why here is because there had been bad news, and we talk about this all the time. I got to scroll back to where I originally talked about this, and I believe it was all the way back in September. And the reason I'm talking to you about this, I'm not patting myself on the back here. I'm just saying that when the relative strength changes, you got to be aware of it. A big name like Boeing has definitely adhered to it, and that's a name that could move other parts of its own sector, and you've got to be sort of aware of that. And I talked about home builders; they're continuing down as well. And meanwhile, a name like General Electric is up over 100% this year. So you've got stock selection is obviously super important. But here's the tweet I'm talking about. Seeing some names, a negative relative strength change. First one's Boeing, a relative strength signal, multi-factor Chaikin reading flash bearish signal. So we had not only the relative strength change here, but the bearish downgrade as well. As I said, somewhere around this price of, let me double check here. I can't see it for a second. Yeah, around 216 or so. Okay, it's a weak stock in a weak industry, and you want to avoid those. And that's why using the Chaikin system using some of the technical analysis and following me here, not only on the video, but on Twitter to catch some of these. So I just wanted to point that out. All right, let's dive into the Nasdaq and the S&P right now. All right, I'll start with the Nasdaq. Now this has been riding the lower channel, but on the other side of it, right? Not above it. It's now below it. So that's becoming resistance. Now this is interesting. As I said to you, when this 200-day gets into this gap fill, I think it's going to coincide. It's got a confluence of levels that probably will be tested. I don't know if or when really, but I just make that assumption because that's the way the chart is setting up, and I'm just showing you that because I think we've been calling it out now, and I'm concerned about it. Obviously, as rates rise, that's going to be a headwind on tech stocks, and some names are feeling the heat, so to speak, in the last couple of weeks. And again, surprisingly, also, and I can't not say this because it's true. The fact that it's holding up in these areas and the S&P is as well, is pretty incredible. So I'm not upset about it, but it makes me a little nervous because if it would just have a slow move down, it's something we can handle that's not out of control. I think that would be acceptable if it's in an orderly fashion. I'm just not looking for any capitulation events. But if we do get that, we'll have to take action. And that's typically the time when you get some really bargain basement prices. But you might be fighting the trend there. But if you've been eyeing up a stock that gets to a price that you just can't refuse, maybe that's going to be the time to take action. All right, let's jump at the S&P right now and take a look. All right, looking at the S&P here, just adjusting my chart slightly. I talked about this. I forget when I wrote this exactly. I think it was somewhere around the 6th or the 7th, whatever, or the 9th, I should say. It might have been the 9th when I started talking about this level because it's gap fill. And look, it's tested it 1, 2, 3, 4, 5, 6, 6 times and failed here on the 7th, unless we get a rebound today. But, Paul Tudor Jones came out and said he's looking for a 12% pullback right around this level. That would put it here. That also is in line with a major gap fill here. Again, that's 13.5% down from this high back in August or so. So all of this kind of starts to, feel like it might be happening. That will put it well below the 200-day and well below what I called support, which was resistance of 41.72. Again, I just hope it's in an orderly fashion. You just don't want to see one of these, terrible 1 or 2 day pullbacks or drawdowns. But the thing is again, that's maybe where some opportunity could exist, and it could be temporary. It could be a V-shaped recovery. But again, there's a lot of ifs and coulds and maybes there. And nobody can predict that. But I know if we understand the risk and we see the guardrails, we know where, our limits lie. And I think that's what I'm looking at here. Okay, I'm going to look at TLT next. All right, I know you're getting tired of this, but, this is the stock, or I should say ETF, that I've been calling out, I don't know, for 18 months or something, about these levels. My first target was around 95 to 97. It hit that, went through it, bounced around it, and consolidated for several weeks, if not should I say, almost a year, really, this whole year. Started to break down again in July and heading to my ultimate target of, I think, 75 to 80. Now, that could put the 10-year above 5%, if that's possible. It certainly is. And the last time we were at that level or higher was somewhere around June of 2007. And so I don't think that's out of the question. This area was definitely resistance and then support. So I think it's very important. And 75 to 80 remains my target on TLT, which means rates are higher, not lower. Okay, I'm going to jump into the Chaikin system now and show you some names that I'm concerned with, and that'll be it for today. All right, so I ran a screen here. It's my own personal proprietary screen that I run here on Chaikin, and I'm looking for relative strength changes to the downside. One name that popped up, I can't believe it. It's rare to see, but it does happen from time to time. And don't forget, this is a pretty strong company. Obviously, we know it as Berkshire Hathaway, Warren Buffett's claim to fame here. Down over 1% today. Rally back to sort of the Keltner channel, the 21-day moving average, and you can see that long-term trend flattening out. So the trend is getting weak. It's identified up here, but the other problem is the relative strength is going negative as well. So you got to be careful with this name. I don't like to call it out as a negative situation, but that's just what it is. Here's another home builder. We talked about them for many weeks ago. Toll Brothers looks like the last one to really break down The other ones were, Lennar, LEN. Let's take a look at that. It's a big name. Obviously, it's a neutral plus stock, which means it's a bullish company, fundamentally strong, but the stock is breaking down. Now, it broke down all the way back in August. You can look at, we call it DH Horton, Dr. Horton, DHI is the symbol. We look at that one, also neutral plus, also breaking down. I feel like Toll Brothers was the last one here. There's some other names here. You could look at Jefferies on the capital market space, also changing trend on the downside. Sherwin-Williams, a building product situation there, chemical company, but we know it as the paint store and the painting company. And I think that's breaking down here. I think below 242, kind of where we're at, it brings us to that next level of 222. And relative strength is telling us that it's overbought as well. So you got a lot of indications here of lower setups in the future. One of the other ones, I just forgot it. I was thinking about it, and BLDR, I think, is on this list. Let me just find it real quick. Another builder / construction company up. It's above Berkshire there. And also a new name on my breakdown list. So you can scroll. Here's Pulte Homes. I just noticed another home builder there as well. So you can scroll down on the video. I'll scroll this list so you can see all the names on there. Go take a look at them. If you have an exposure, they are breaking down. I just wanted to make sure I call that out. All right, I'm going to look at TLT and other components here on the Chaikin system, components of the market that is on the Chaikin system, and then end our video today. All right, look at the Qs, the QQQ, the Nasdaq 100. And we just saw the other chart of the Nasdaq, the NDX. That I was showing you. And I think, this to me is just showing a period of lower highs. And it's maybe potentially breaking down below the trend. But the relative strength versus the SPY is pretty incredible, right? And that's just telling me things are still strong. If I go to the SPY, we don't put SPY against itself. We use IWV, the Russell 3000, also still strong against all of those stocks as well. But living below there, maybe it gets down to test here again. As I said, it could see that gap fill. I don't know if it's going to happen. If I did, I would tell you. I just don't know if it is going to happen. But that's kind of where it looks like it's, potentially changing trend to. I just we can't deny it. That's what's happening there. And last, we'll look at TLT. The name here on the Chaikin chart. Now, this again broke down back in April. Oddly enough, was bullish there for really a hot minute. And that just meant that it was holding up stronger than most of the other ETFs out there in the market, but it consolidated and started to break down rather quickly. It did not stay there very long, and then obviously got bearish, and now obviously in the very bearish camp down around this, again, lows of 83. Now, if you look at my one-day chart here, the low is 83.85, so we do have an 83 handle on this. 75 to 80 is still going to be my target. So that's kind of where we'll end it today. Okay, I apologize for the poor lighting here. It's the best I could do on the road. Again, I got to get to a conference, and I wanted to get this video out before the end of the day. Thanks for tuning in. Again, this is Pete Carmesino, Chaikin Analytics, your chief market strategist here, and I appreciate you tuning in. Follow me here obviously on StockCharts TV, on the YouTube channel. Follow me on Twitter as well. Find those anecdotal situations that I put out, and give me a like on the video if you like what you see. Appreciate it. We'll talk real soon. Take care.